We're set for what looks to be a fairly soggy start out here in Asia, and there's why. Pullback on Wall Street overnight. The Dow down 225 points, about 2% off. The S&P off by almost the same quantum. The Nasdaq giving back about 1%. So much for that rally in financials. Let's get to Kevin Ferry, Chief Market Strategist at Cronus Futures Management. He joins us live out of the CME. And also with us for the full hour, Ron Ianieri, Chief Options Strategist at the Options University, an educational company that teaches investors about trading options. Gentlemen, both of you, good evening your side. Nice to have you with us. Just real quickly, thoughts from the both of you, starting with Kevin. What did you make of the market today?
Well, I think, Martin, the main thing was not to forget where it was coming from. It was two aggressive up days in the market on summertime, light volume. It's not totally unexpected to see the market set back, especially when you have bad news coming out of the financials again. That's the one constant that you keep seeing out of the U.S. market. But it wasn't all bad. We also, in the past 48 hours, had two very successful auctions of long-dated securities, 10-year notes and 30-year bonds. Okay. So there is a glimmer of hope. I think it's a mixed bag, but a rough session for sure today.
Yeah. Okay, Ron, what do you figure?
Well, you know, we keep seeing the same pattern over and over, and it's starting to disturb me because it doesn't seem like we're learning anything. You know, we get very enthusiastic when there's no news out there. We rally the markets up, and then the news that we expect, which is bad news from the financials again, comes out. We act like it's a big surprise, and then the market gets hammered again. And it really scares me because I think the individual investors start actually thinking, because they're seeing the markets rally, they start thinking, oh, here's the bottom, this is good, things are better. And they've got to understand that you're going to get a couple bull rallies in this bear market, and they're called suckers rallies for a reason. And we've got to stay away as an investor from these. There's a lot that the financials have to work through. It's going to take them a while. It's not going to end tomorrow as much as everybody wants it to. We're in this for, we've been in it for a while, but it's going to be a while longer before we get out of it. And we've got to keep that in mind and quit buying every little glimmer of hope.
Yeah.
It kills us.
I mean, to what extent do you feel that's being epitomized by the reaction of the dollar to what was a pretty bad number on the jobless claims front last night? I mean, the dollar rose because it was clinging on to the good news from the housing side. I mean, is this kind of like it selects what it wants to as opposed to selects what it should?
They're grasping at straws, yeah.
Well, the problem here is, go ahead, Kevin, I'm sorry.
Well, I was just going to say that the dollar situation is really a tug of probably the best of the worst in the basket. And right now, our news is a little bit more well digested than the global slowdown. I think that's the other key behind the bond market here. Rates are falling because the commodity bubble has kind of come off the boil here in the States. But at the same time, you're seeing that's part of a global slowdown story. And I think that plays into what Ron's saying is you don't go chasing the stock market in a global slowdown scenario.
Yeah. Okay, the pair of you will come back and talk more in just a bit. Kevin Ferry, Chief Market Strategist, Cronus Futures Management from the CME, and Ron Ianieri from Options University. We'll get back to the pair of them for more in just a little while.